If your investment grows by 22% in one day, how would you feel? Happy? Validated? Excited? Interestingly, this positive feeling is often shadowed by a sense of regret where people say to themselves, I wish I'd invested more money. That's how many Tesla investors must have felt on Thursday, October 24, 2024, when Tesla stock spiked about 22% in a wild rally. This was in reaction to the company's third quarter earnings report. But here's what's interesting. Every Tesla investor who held their shares enjoyed the same percentage gain on the day, but they all had different returns, with one man taking the lion's share of the spoils. Elon Musk made $26 billion in one day, with no one coming close. A 22% ROI on Musk's hundreds of billions is tens of billions of dollars, but the same 22% gain on another investor's $100 is only $22. This is the same reason why large commercial banks make hundreds of millions of dollars daily in interest revenue, thanks to their enormous loan portfolios. This brings us to a very simple but crucial aspect of investing. The more money you invest, the higher the impact of every percentage gain on your balance, which means the more money you make. Just take a look at this table. You notice that when the investment balance hits 6 figures, the returns become wild. Your investment balance is not just a number, it's like a factory production line. The higher its capacity, the more units are produced, where these units are the returns you get for every percentage gain on your portfolio. When they say, let your money work for you, this is what they mean. So, if you want to reach your financial goals earlier, build a solid investment balance. But how do you do this? Before I tell you, there are some ground rules. If you're trying to build a solid investment balance, you're likely about to stake a significant amount of money. As a result, you have to be rational, intentional, and make informed decisions. Furthermore, you should bear the following in mind. 1. The goal is to reach a certain portfolio balance as soon as possible. This will be the sum of your contributions and returns. 2. Doing this requires dedication, consistency, and laser focus. 3. Only invest in quality stocks. This is because losses trigger the other side of compound interest, which is equally powerful and in this case can be quite devastating. Now that we've got that out of the way, let's talk about what to do to increase your portfolio balance faster than most people. 1. Determine your target investment balance. If you want to achieve a goal, you must first know what it is. While there is nothing wrong with just funding your investment account from time to time, having a clear target helps you adopt a more methodical approach that aligns with your long-term financial goals. This clarity is also likely to make you more motivated, consistent, and focused. Moreover, when you know your target investment balance, you can work backwards to determine what your corresponding regular contribution would be and whether or not it's realistic. If not, you get to make necessary revisions. Once you are clear about what you want, it's time to think about how to get it. So, let's talk about practical ways to make the extra cash to grow your investment account. 2. Increase your contribution. If you want to grow your investment balance faster, you need to increase your contribution. It's as simple as that. However, considering your current financial commitments, you might be wondering, how am I supposed to do that? Where will the extra funds come from? And how will I get them? Well, there are generally 2 ways to increase your disposable income. 1. Reducing your expenses, and 2. Increasing your income. The first is largely within your control, but the second depends on your influence on several external factors to align in your favor. Nevertheless, here are a few practical ways to increase your investment contributions. 1. Free up extra funds by significantly reducing or cutting off unnecessary spending. The extra $10, $20, or $50 can buy full or fractional units of some stocks. 2. Dedicate a few hours a week to earn more money. 3. Use windfalls wisely. Direct bonuses, tax refunds, monetary gifts, or other unexpected cash towards your investments. 4. Ask for a raise. Apply for a higher paying role or work extra hours. You might have to become more valuable to make this happen. 5. If you own a business, increase your prices justifiably and as much as practically possible. Meanwhile, this is very important. You should remember that the goal is to invest these extra funds. 3. Reinvest your dividends. Dividends are like free money that can quietly turbocharge your portfolio without lifting a finger. Unfortunately, not everyone takes advantage of this opportunity. When you reinvest your dividends, your return is substantially higher over time. For instance, if you invested $100,000 in the S&P 500 from October 2004 to October 2024, at the end of this period, you would have $519,000 if you didn't reinvest your dividends and $757,000 if you reinvested your dividends. I don't know about you, I can think of different things to do with the extra $238,000. When you reinvest your dividends, your investment balance increases, resulting in greater impact from future percentage gains, higher dividends down the line, and a continuous cycle of growth. Dividends aren't just quarterly windfalls to be blown as they come. Reinvesting them is a powerful strategy to further enhance your returns and enjoy the multiple benefits of compound interest. The whole point of investing is to use your money to make more money. The more money you invest, the greater the impact of every percentage gain on your balance, which means the more money you make. This leads to a bigger new balance, and the cycle of growth continues. Thankfully, you don't need hundreds of billions of dollars to make this happen. You just have to start from where you are and keep growing. Hope you found this video helpful. Thanks for watching. I'll see you in the next one.
Too many days in the darkness without a glimpse of the